Good morning or good afternoon, depending on where you're joining us from. My name is Jim Park. I am AAIM's CEO and today's MC. On behalf of AAIM's board, welcome to our first virtual event of 2021. We have an amazing program for you today, and we are truly honored to have so many outstanding leaders who have agreed to be a part of this virtual gathering. It's been a long year of Zoom meetings and adapting to new way of working through this pandemic. It's also been a year of too many tragedies and searing reflections of social justice inequities too many in America continue to face. All of this has prompted needed discussion in our industry and paved the way for new initiatives to put diversity and inclusion in the spotlight. Today's discussion will help us make sense of this past year and look ahead so we can help to create a more equitable and inclusive investment industry. Despite the belief that AAPI community is doing perfectly well in the investment industry, we know the road to full inclusion for our community is still a long journey. Our pipeline into the industry starts strong, but we face clear barriers to upward mobility, often coined as bamboo ceiling. And for those of you who venture to start your own fund to create generational wealth, the misperception of the model minority and inflated view of how well we are doing gets in the way of our collective success and growth. We are often overlooked for emerging managers program because of those same misunderstandings. We are treated like we manage 10% of all AUM, rather than the reality that we're managing less than 1%, 0.7% to be exact. There continues to be a large gap between facts and perception of our community. We also have work to chip away at the misperception about the performance of minority-owned and managed funds as well. We know investing in minority managers does not compromise performance. In fact, in certain asset classes, we outperform the market overall. I believe it's a good time to be in this industry, in this business, if you believe in creating opportunities for diverse managers. Today's industry is more open than ever to a meaningful change, as embracing many ways to encourage diversity and inclusion throughout the industry. But AIM also believes that efforts to create more transparency is critical to a long-term change and accountability in our business. We are hopeful of what's to come, but we will continue to be vigilant in advocating for greater opportunities for everyone. I want to thank all of our sponsors and our supporters for making this program possible today. And we look forward to seeing many of you in person, and hopefully we will see all of you in person at our national conference in San Francisco, September 15th through the 16th. Now let's get the program started. A special welcome from Treasurer Fiona Ma. Treasurer Ma is California's 34th state treasurer. She was elected on November 6th, 2018, with more votes than any other candidates for treasurer in the state's history. She's the first woman of color, the first women certified public accountant elected to the position, which is shocking. The state treasurer's office was created in California Constitution in 1849. It provides financing for schools, roads, housing, recycling and waste management, hospitals, public facilities, and other critical infrastructure projects that better the lives of residents. California, as you may know, is the 5th largest economy in the world, and Treasurer Ma is the state's primary banker. Her office processes more than $2 trillion in transactions within a typical year. She provides transparency and oversight for the government's investment portfolio and accounts, as well as for the state's surplus funds. Treasurer Ma oversees an investment portfolio of about $125 billion, 35 billion of which are local government funds. She serves as an agent of sales for all state bonds and is a trustee on an outstanding debt of $93 billion. Those are a lot of numbers, but bottom line is we're so proud of the work that you're doing. and thank you so much for honoring us with your presence today. Treasurer Ma?
Thank you, Jim. It's great to see you. The last time we met, it was virtual, and now this is our little world in our little 1x1 inch boxes, but it's still great to be able to continue to connect and share experiences, stories, raise awareness, and network. It's a little difficult, but I had an opportunity over the last couple of days to talk to your two co-founders, Maylee Tom and Ginger Liu, and they are still very, very committed to the empowerment of the AAPI community and making sure that we are represented and get our fair share of opportunities. As your state banker, when I first started 2 years ago, I can tell you the meetings that I was at was not very diverse, but I appointed a chief of staff who was Filipina. So when two Asian women walk into a banking meeting, the bankers figure out very quickly they should have people that look like us. They should have women in the room. They should have APIs in the room. And a lot of those folks have now been promoted. Many of them reported that they were waiting for promotions for many years, promised, that raise, and now because of representation at higher levels, they are now also being elevated. And I think that's an important message, Jim, is that we need to be deliberate. Things don't happen by themselves or overnight, right? And so when people get to that level of upper management or elected office, they need to recognize and pull people up and make sure that their executive leadership team is as diverse as the state of California. When it comes to corporate boards, you all probably know that California passed two pieces of legislation trying to level the playing field. One was SB 826 by Senator Hannah Beth Jackson and now President Pro Tem of the Senate, Tony Atkins, to require or mandate a certain number of women on corporate boards for those boards that are headquartered here in the state of California. It works. It does work. We try to use the carrot or the stick. Sometimes the carrot doesn't work, and so then we have to use the stick. But since that legislation passed, the amount of corporations that don't have women on corporate boards has significantly shrunk. And so that means that legislation is being taken seriously. Now, when I ask around to the new women that are put on corporate boards, they don't necessarily take off a man from the board. They just add another board seat for a woman. And some people don't feel that that is acceptable, but for me, it is at least one step closer to leveling the playing field. So then Governor Gavin Newsom recently signed AB 979 by Assemblymember Holden that would require a certain number of people of color on these corporate boards. So again, I think you're going to see a lot of the board compensation change here in the state of California because of the legislative action, as well as the leadership from Governor Jerry Brown, as well as Governor Gavin Newsom. And so that's what it's really about, right? It's not only about networking with each other, but how do we network with a purpose? And again, it has to be deliberate. I recently posted a picture of my whole leadership team here at the STO. And I think when you post pictures of people, then you can see very clearly whether you have a diverse board or leadership team, or you don't have a diverse board. And you can't necessarily tell by names because people get married, they have different hyphenated names sometimes, but pictures don't lie. And that's what we need more of. If we are going to really create more parity and equity, is to create more transparency so that people that are not creating these diverse boards are actually going to feel the pressure from people who are looking from the outside in. And there has been a movement through NASDAQ, for example, and other companies who are leading the way in the ESG space, looking at the environment, environmental, social, and governance, mandates. And as we at Calpers and CalSTRS and other investment funds really do start tracking ESG principles, and investors start demanding that they want to make sure that their money is put to certain places or with certain industries or companies who are, striving to fulfill their ESG goals. That's going to be better for all of us here on this call. So I look forward to our continued working relationship. It's great to be here as the treasurer of the 5th largest economy. I always say that my father finally has stopped bugging me to go back to accounting and make more money, but he is now finally proud of where I am. And so here I am in public service. I look forward to working with all of our financial partners here at the office. And I also want to say that since I started 2 years ago, all of our underwriters now, if you follow all of our bond sales where we have negotiated sales, all of the underwriters that we put in those positions now have are very diverse to make sure that our minority firms are represented, make sure our disabled, our women-owned, our veteran-owned firms are part of every major deal that we have here in California. And again, it starts with intentionality, making sure that you recognize that. And I have a great team who is very, very focused on making sure that everything we do here in the Treasurer's Office is diverse. It seeks to level the playing field. And again, a lot of emphasis goes into racial and gender equality. So thank you for this opportunity to be here, and I hope you have a great conference today.
Treasurer Ma, thank you for joining us. May I ask you one question? I know
Sure.
I know your father is very proud of you, and so is the rest of us for all that you have accomplished in your career. As you kind of reflect on more recently, I mean, obviously the social justice discussion, which was prompted from last year's, kind of George Floyd and all the deaths that ensued, that has prompted a broader dialogue about, unequal social justice system. More recently with the many of this AAPI hate crimes that have really, affected us personally. What kind of change, what kind of additional change should we look for? I mean, I know California has been sort of at the forefront of kind of leading, whether it's board diversity, it kind of looking at ways to make sure that all communities are embraced and accepted, and we do our part.
Yeah, I lamented this past weekend about a speech that I'm gonna be giving to the California Democratic Party. And Asian hate crimes obviously is central to that theme. But as a community, we are a little bit quieter, right? We don't take to the streets, we don't take to social media when we are upset and angry. But that's where we have to learn from our brothers and sisters who are better at making sure we point out, these inequities, discrimination, racism, that we have to join and stick together and be united in these efforts to combat all of the isms that are out there. And so, even if Black Lives Matters did not necessarily affect our community, we need to be there to stand with our brothers and sisters, because when we need them, in our case, for example, with all these Asian hate crimes, they are standing by us as well. And that's how we build a stronger, more united state. California is the most diverse state in the nation. And I think we pride ourselves on our diversity, but that means we need to stick up for each other. It just can't be one community getting attacked and it's not our problem, right? We as the Asian community need to make everybody's problem our problem, because when we have our problem, we also need the help from our brothers and sisters. So that's what I would say is during these Asian hate crimes, we don't have as many protests, but we all doing what we can to, combat, these Asian hate crimes. But we as a community also need to stick up and stand up and get outside of our comfort zone when things are not right. We need to stand up and speak out. So that's something that, I think Senator Hirono, Congresswoman Meng, they are really leading the effort. Tammy Duckworth, Senator Duckworth at the federal level, Assembly member, Congresswoman Judy Chu, Congressman Ted Lieu, Congressman Mark Takano, right? We have a very, very active API leadership membership in Washington, D.C. And here at the state level, we have the most amount of API legislators ever before. We need a couple more women. We don't have as many women right now, but we're working on that. And so as we are moving up the ladder and getting more APIs elected, that is our mandate as well, is to speak up and lead and make sure that, we stop these Asian hate crimes as soon as possible, and make sure that our new top cop, Rob Bonta at the AG's office, I pushed very hard to get him appointed because as an immigrant himself, he understands how this type of hate will continue unless somebody puts a stop to it. We need enforcement. We need to prioritize stopping any type of hate crimes or violence against any community. And Rob Bonta is going to be that person for us. So, we do our part here on the political end, and, we look to you, Jim, and others in the financial sector to do what you're doing. And hopefully we can, combine and meld our efforts so that we have a stronger API community.
Yeah, well, thank you for those comments. It's despite sometimes what feels like a middle of the night, darkness of the night, but you point out some of the tremendous success we've had as a community of putting up some terrific political leaders in our community, and you're certainly one of those individuals. So thank you so much for being a part of this dialogue and being a part of this program. And we look forward to hopefully welcoming you to our event in person very, very soon.
Thank you.
Thank you so
Jim.
much.
Okay.
Appreciate it.
Bye-bye. Thank you.
Okay, well, that was a terrific discussion, and we're really very thankful for Treasurer Ma for her willingness to be a part of this program. I'm really excited about the next part of the program. It's being moderated by one of the most dynamic person I know. No pressure, Susan. Susan is the Chief Strategy and Capital Development and Private Investment Activities for 2 Sigma, and she is a very active member of the board for AAAIM. Also, she's now a podcast celebrity with our own Johnny Wu. She has a podcast show, AIM High, and Susan has joined 2 Sigma to lead the growth initiative and fundraising efforts. She is responsible for overseeing the marketing process, leading the team in new business development. She is involved with AIF, Women's Steering Committee, and a founding member. And a fun fact about Susan is that she's an avid fondant cake maker and decorator. And I'll send you my birthday so you can send me a birthday cake, Susan.
Absolutely.
I'm excited about this panel. You have a terrific group of people you're leading a discussion with. So take it away, Susan.
Great. Thank you so much, Jim. And thank you, Treasurer Ma. I think we will all leave today, hopefully remembering some of the words you just said, stronger, more united, stand up and speak out. And so really fantastic to have you here. And I'm so glad and so delighted to be moderating our 2021 LP Outlook panel and sharing some of the insights from our panelists. So as Jim mentioned, I'm Susan So. We did want to start out before I introduce you to our panelists, who you can see their pictures here. They are exceptional and I can't wait to get to them. But we thought we could start it with a quick poll to help our panelists get a better sense of the audience. Please note it is anonymous, So don't worry about that. And then the answers will come up. So just take a couple seconds to fill these out if you could. So we have a lot of private equity exposure here. Great. Yup. Get ready. Mansco, you too. You'll see we have a lot of other. We'll have to see what that is. Almost no one in hedge funds or infrastructure, which we'll have to change this next time. And quite a number in global equity and some venture and real estate. So that's great. Welcome, everyone. Let me see. I'll go through these pretty quickly. You can see we have a good mix of type of organizations, but particularly quite a number of fund managers and asset management folks. So that's interesting. And you could see here, most folks are expecting to go back to work in September or fall, although quite a few of you are already back. So hope you're being safe there. And then in terms of traveling for business, a minority have been traveling already. I'm interested to hear separately who's actually seeing you, because most allocators we know are not meeting. But it is interesting to see that most folks are expecting it to be, well, not most, but a little in the fall, 32%. And there's a good chunk next year, 23%. And our final question, did your firm issue a statement internally or externally about the recent racist attacks against Asians? It's a mix, 59% yes, 41% no. So we got a little bit of work to do. And to that point, that's the whole stand up, speak out, and stronger, more united. So thanks for everyone for those poll results. So with that, I want to really turn to our panelists here. I am joined by Mansco Perry, the Chief Investment Officer for Minnesota State Board of Investments, Susan Chen, who is a Managing Director of Public Equity for UTIMCO, and then Yup Kim, Head of Investments for Private Equity at Calpers. I really don't need to introduce you guys further than that, because I'm sure everyone in the audience knows who you guys are and is keen to hear what you have to say. But I thought maybe we could start if each of you could say a little bit about your organization's investment program, but then also answer sort of a fun fact question. Since many of you have seen me at these conferences, I like to start out, especially during COVID, asking a question about what's your guilty pleasure you've had, what's the one skill you've learned. So my question for our panelists today is, tell me about one simple pleasure that has helped bring a sense of normalcy for you as things are opening up. For me, it's my daily run to Starbucks. I probably should have bought the stock last year, given how much I've been spending there. Of course, I have my sanitizer wipes, and then followed by a trip to Trader Joe's. So with that, maybe I'll ask Mansco to start out, if you wouldn't mind, but don't forget the fun fact question.
Hi, I'm Mansco Perry. I'm the Executive Director and Chief Investment Officer at the State Board of Investment, Minnesota. We're the investment agency for the state, and the largest chunk of money we manage is our pension plan. In total, we have responsibility for about $115 billion, and about 85 of that is for the pension plan. Responsible for a huge staff of about 24 people, and that includes our support people and our accounting people. So there aren't very many of us. We've been pretty fortunate in that for 40 years, we've been a top quartile public fund performer. The last 10 years, I've been having a lot of fun pointing out to people, I didn't bring my little thing, but we've been number one. So we feel pretty good about that. But my guilty pleasure is that I'm a huge baseball fan. The season has started, and as soon as we're finished here, I can turn on to see my beloved Yankees hopefully win a game.
All right. That's fantastic. Thank you, Mansco. I'm going to go to Susan. Actually, I should have done ladies first. Sorry. But Susan.
Hi, everyone. It's great to be here. So I'm a Managing Director of Public Equity at UTIMCO. We manage about $55 billion of assets for the University of Texas and Texas A&M systems. Those are the two public university systems in Texas. So the returns that we generate and that our managers help us generate go to support the missions of those universities. promoting student education, healthcare for patients. We have several hospital systems that are part of the UT and A&M systems, and then also academic research. Fun activity, I took up kombucha brewing for a little bit during the pandemic, but it was kind of like, I don't know if anyone's taken up sourdough baking, but it's kind of like sourdough where you have to just keep brewing. And so it got a little out of hand, so I had to stop, but it was fun while it lasted.
That's fantastic. Maybe when I come visit you, you'll make some kombucha for us. All right, I'm going to turn it to Yup.
Great. Good morning to those in the West Coast, and good afternoon to friends on the East Coast. My name is Yup Kim, and I'm an investment director and head of investments for Calpers Private Equity. The PE program here has about 60 billion under management, and we have a deep team of 30 investment professionals investing globally in funds, secondaries, and co-investments, all based here in Sacramento. As it pertains to guilty pleasures, or something that's helped bring a sense of normalcy, I've very selectively begun to take a few coffee meetings and walks in the park with both friends and business partners. And, it's just kind of a reminder that we, this is a relationship-driven business. And so it's really been nice to kind of, cautiously but selectively kind of rebuild on that. And yeah, it's been nice. It's been nice to kind of diversify a little bit away from Zoom calls.
So the 3D really matters to you, seeing someone in person, not on the screen, right?
I suppose.
That's how I feel. I wish we were all in person, but hopefully in September, we'll see. Maybe we can all see each other in person then. But that's great. Thank you, everyone. Well, so let's talk about the investment environment, since you are, you guys are experts in the investment field. And I know our audience would be really keen to hear some of the insights and observations you've had. And in particular, where you might be investing, but we'll get to that. So Mansco, as the CIO, I'd be curious to get your view on, or your reflections over the past 12 months. There's been a lot of fluctuations in the market. There's also growth. Maybe you could just start us out there, but then also in particular, if you've made any notable changes to your strategy or asset allocation based on what you've been seeing.
Well, like everyone else, about 14 months ago, things were beginning to crest after hitting what many of us thought was the high point that our portfolios would see for some time, the beginning of the year. And then the pandemic started. There's a big drop off, lower than what some of us saw back in 08. And, at that point in time, getting very concerned about the portfolio, and remembered back in 08 that the biggest concern that we had was liquidity. And back then, I realized pretty quickly that if I'm not able to pay benefit payments, it doesn't really matter what's in my portfolio, I'm probably not going to be in the seat the next day. So we began focusing on ensuring that we had liquidity so that we could essentially point out to our pension fund directors and the beneficiaries and my bosses. And my bosses are the governor, the attorney general, the state auditor, and secretary of state. So, real icons of the market. But wanted to basically give people comfort that, we could make payments while we focused on the portfolio. So at that juncture, decided, and we've always been pretty simple. I mean, we buy stocks, we buy bonds, and we're in the private markets. And the bigger focus initially was on our fixed income portfolio, because for the last 10 years, I've had a love affair with treasuries because of what happened in the crisis. And so we did change our portfolio slightly. We moved about 3% from equities to our bond portfolio, and added it with cash, and came up with a fixed income allocation that maintain 10% in treasuries, 5 years plus, although I keep having arguments with my people that rates could go up. Maybe it shouldn't go out till full maturity of 30 years. We then took 5% and added our cash and created a short duration bond ladder to ensure that every month that the 200 million we need to send out in payments was there. And then we reconstructed our core plus portfolio by getting rid of the core, making them more core plus, and then adding in some high yield, dedicated high yield emerging markets, and some structured credit. And so that was the big focus of the year, changing that. Our equity portfolio continued to have its home country bias of about 67% domestic and 1/3 non-US. And I've been upset because I changed it about 5 years ago, when everyone kept wanting, you need to have more non-US, you need to have more non-US.
Right.
So we went from 75 25 to 67 33. So I don't listen to people anymore, because I should have kept it where it was. But we so we basically just made some minor tweaks. Our bond program's 25%. The public equity program is 50%. And then we've got a target of 25% for our private markets. It's primarily private equity, private credit. We did have, historically, have had a large exposure to what's now somewhat unfavorable oil and gas resources in the portfolio, and then rebuilding our real estate portion of the portfolio. To the extent that we're not at our 25%, right now I think we're about 16%. We take the difference and we put them in public equities, but prior to this past year, we just throw them in with our dedicated public equities. We decided to segregate that off, put them into a combination portfolio of all S&P 500, half physicals and half cash overlay. And then we also reinstated a currency overlay program that we had 20 years ago to hedge out a portion of our non-US public equities. So those are the changes we've made, and I feel pretty good. I have a meeting a month from now, and I can go back and point out that even with all the treasuries, that we'll have a 1 year return of 35%. And,
wow, that's fantastic.
And like I said before, if you look at Tux and compare us to all public funds over over $20 billion, you'll see that I've been back leading the program for the last 7.5 years. But I'll say, for the last 10 years, we've been in the top 1%. The last 7 years, we've been in the top 1%. The last 5 years, we've been in the top 1%. So we've been pretty lucky, and I'd say that the primary reason for that is that if you look at the portfolio, it's pretty simple.
Right.
You won't see any hedge funds. You won't see much of anything. Going to dedicated EM in the bond portfolio is about as crazy as we get on the public side. Now in private, we've been, like I said, pretty fortunate. We've been doing private markets for the last 40 years and pretty mature portfolio. So
Well, that's
Now they say
fantastic.
that will tank. Now they say that will tank. So.
That's great. I think we have a lot of us have a lot to learn from you, Mansco. So well, we can have a whole conversation about this another time. But actually, I love that you ended with private equity. Maybe we can ask Yup to talk about sort of any notable changes to strategy in the private equity business at Calpers.
Yeah, thanks, Suzanne. We haven't made any notable changes. I think holistically on a private equity program level, we're not trying to make dramatic asset allocation changes, as we're not in the business of timing markets. We're really endeavoring to kind of build a balanced fee portfolio, looking for kind of top decile performers and best relative value within kind of each of the different segments of venture growth, LBOs, and really kind of doubling down on those firms that have just real kind of durable, sustainable, competitive advantages, and just really searching for partners who want to partner deeply with us for the next decade plus. People who are humble, hungry, differentiated in their approach to the market, and so none of that has really changed. Tactically last year, we had closed a few mandates, which took advantage of the COVID-driven sell-off in the credit markets, and which generated solid returns for the program. But again, that was kind of a small portion of the PE portfolio. And lastly, as it pertains to kind of our activities in co-investments, we've really been proactively studying the K-shaped economic recovery. I think rising tides lifts all boats. Valuations are a bit crazy, across the board. But really discerning and investing in those companies that truly are different and will be best positioned to capitalize on the megatrends of either deep recoveries on the bottom part of that K, or kind of the continued accelerated momentum on the top part of that K, in the coming years will be our priority. We've been executing kind of co-investment deals across the globe, in Asia, in Europe as well. And I think kind of a common theme you're seeing across the board is, we're really prioritizing companies that have, sustained market leadership as, and those that would kind of very credibly kind of sustain the next market downturn. And so, I think that kind of highlights, some of the activities that we've seen in the past 4 months.
That's great. Thank you. Yep. I was going to ask you globally, but you actually addressed it. So thank you. Susan, it'd be great to hear what UTIMCO has been doing. I know you manage the public markets, but venture also falls in your portfolio from the last time when we spoke. So it'd be great to hear if you've done anything there, but just generally in your particular strategy. Also, any observations or changes that you made over these last 12 months?
Yeah, I've actually moved on from venture, so that's no longer under my purview, but I'll chat a little bit about what we're doing in public equities, and then at the endowment level as a whole. So within public equities, we did rebalance in March of last year. And that was kind of, one of those things that we had said we would do if there was a big equity drawdown, but in the moment is very hard to do, right? So we followed our game plan, and that had a good result. We have seen our managers, many of our managers came into the pandemic holding kind of COVID beneficiaries or growth-oriented companies, and we saw them rotate into more value and cyclical names in the fall and summer. And then we also tilted our portfolio a little bit more that way as well. So sort of a combination of our managers doing that and us doing that, just recognizing that coming out of the pandemic, economically sensitive companies would be doing really well. We have invested in a couple of managers without performing in-person diligence at their office, which is very unusual. These are all managers that we had met beforehand, but that was a new process for us. And then at the endowment level, similar to Mansco, we've been spending a lot of time thinking about the role of fixed income in the portfolio with inflation concerns and yields being relatively low compared to history. And so we're doing kind of an earlier than usual revision of our strategic asset allocation to see if we want to change any of our long-term policy targets as a result of possibly moving into a macro environment that looks very different from the macro environment of the past 20 years.
Great, thank you. Actually, that was really interesting, Susan, that you added that you actually did onboard managers, but you had to finish your diligence virtually. Mansco, Yup, were you guys able to do, diligence also virtually or with new managers, or was it really only existing managers?
For us, we had some managers that staff's been looking at and become familiar with, but for the most part, it's been continual reshaping of managers that were already in the portfolio. Difficult to diligence virtually, but we've continued to have a lot of meetings with managers, even some newer managers. And as Tom Lee pointed out to me, you've got a lot of friends in the industry, so you can diligence by calling up a lot of others and getting opinions. But we rarely make very many changes, particularly to the public portfolio. And surprisingly, private equity managers seem to be re-upping every 3 months anyway. So, we're always in the market.
Yep. What about you?
Yeah, we've kind of been engaging in fairly kind of proactive outbound sourcing efforts, and we have onboarded a number of new relationships kind of during this remote COVID period. All of it kind of virtual diligence, and I think it is, many members of the team have decades of experience and relationships that we can draw on. So while it's certainly we're not going on site to conduct due diligence, there's kind of a level of comfort kind of with many of these prospective GPs, just given the duration of relationship that we've had at prior organizations or things of that sort. And as Mansco kind of alluded to, I think the number of reference calls we're doing has probably gone up, right? And so I think just getting on a further validation from off-list references of LPs and other GPs and portfolio company CEOs and the like are kind of becoming a more important part of how we diligence folks. And I don't think that will change post-COVID. So I think that was kind of a good catalyst and to our diligence process. And and in terms of kind of the size of managers, we've obviously re-upped to many of our existing kind of strategic relationships, but have also kind of looked to back investor entrepreneurs and also just kind of smaller managers as well. So that's so it's been an interesting time, but it hasn't slowed us down.
That's great. That's great to hear. So let's we could spend a lot more time on investing, but obviously this is the AIM conference. We'd love to talk a little bit more now about diversity and inclusion. And we wouldn't be able to have this event obviously without mentioning, the discussion we said earlier about all the hate crimes you've seen and the violence against the AAPI community. And the discrimination we all know has been around for quite some time. We've just tended to be a community that's tended to stay silent. As Treasurer Ma said, we put our head down, we work hard, we're silent. We don't use social media, not really, right now, as effectively as others. I don't know if that's a good thing or a bad thing, but we probably should be using it more. And organizations like ourselves, AIM, we've made public statements, and obviously the clear message is we absolutely need to do more. We need to be more united. We need to work with other organizations. For everyone here, please do stay tuned. We will have a session following with John Yang, the Executive Director of Asian Americans Advancing Justice. So that'll be really interesting. But I wanted to ask the three of you if you would like to share any personal reflections that you've had from the recent hate crimes and or social injustice movement that was spurred on by the death of George Floyd and so many others. Maybe I'll turn it to Susan first. You okay going first?
Sure, yeah. In terms of personal reflections, the spike in hate crimes is very sad, and it's definitely personal, I think, for many of us who have older parents or relatives, and you see it's not a lot of these incidents are not just AAPI individuals, but older AAPI individuals, so like kind of the most vulnerable in our group. So that does make it very personal, and I worry about my older father who isn't going out much anyway because of COVID, but now I'm sort of telling him don't go out at night and be careful when you're grocery shopping, and thinking like, why do I have to even warn him about this? That's not right. So I'm really glad to see more political organization in our community around this topic. I think if you look at past social justice movements, results really accrue to those who have numbers and those who are organized, right? And sometimes better organization can help if you're not a big group, right? So I think I'm really glad to see more organization efforts around this.
That's great. Yep, would you like to go?
Yeah, sure. Just to, simply put, violence against the AAPI community has to stop. And hate crimes tend to spread like wildfire, and these deaths are deeply worrying. Women are 4 times more likely to be attacked. The number of attacks increased 4-fold versus prior years, and this is fairly ubiquitous across all 50 states. And, real spikes in cities with higher Asian densities. And so, but while I'm not positioned to diagnose the roots or propose specific solutions, I think 2 quotes, just really come to mind. The first is MLK's, "Darkness does not drive out darkness, only light can do that. Hate does not drive out hate, only love can do that." And Mother Teresa, one of my role models, quotes, "There is no great thing, only small things with great love." And so, we live in incredibly unfair times, and it's really been gratifying to see this community really extend their wallets, time, and efforts to shape a more just and equal future for all of us. And the reality is Asian Americans are amongst the most economically unequal cohort in the U.S. And as a community of small business entrepreneurs have been hardest hit by COVID. And as such, I think it's just really important for all of us to recognize that there's a lot of emotional, psychological, physical, and financial hurt and burden in our community. And so I'll end with a call to action, to this audience. Let's really react with radical generosity and philanthropy in all that we do. So thank you.
Great. Thank you. Yep. Mansko, would you add some words?
Yeah, it's been a difficult time for me, and it gets more difficult. I'm here in Minneapolis, where the issues with George Floyd seem to have started a bit more awareness, but it's kind of tough for me when that initially happened, because I grew up in Newark, New Jersey, and similar incidents 50 years ago, and I look back and see that not a whole lot's changed since then. There's been a lot more rhetoric. Hopefully this time we'll see some changes. And then, so we have what's gone on with George Floyd, and the trial is going on now, and we'll see what happens there. But as the trial is going on, we have another police shooting not too far from downtown Minneapolis. But those things are very disturbing. Obviously being an African American, seeing that, but it's gotten to be a little bit more personal with what's happened to the AAPI community, because I have 2 daughters, and my daughters were they're Chinese. I adopted them 20 and 18 years ago. They're in college now in pretty good schools, but and unfortunately Trump-ridden areas, and it's kind of tough, just knowing that your daughters are exposed there. The youngest daughter, walking with an African-American friend, had some things yelled at the both of them, and that's kind of difficult. And I look at it, and I look at this country, and continue to be very concerned, because nothing really seems to change, and there's no reason for it. I mean, there's enough resources and wealth in this country to kind of get everyone on an equal footing, and there are a lot of good people out there who aren't BIPOC, but there just seems to be a lot of unexplained hatred, and the political environment of the last several years has just made it worse, and my fear has enlightened people. So I just think that many of us have to kind of continue to be vigilant and push forward. In the industry, I've been very concerned that you know, I've been in the industry for quite some time, and there's been some change, but little change. We're hearing some very good rhetoric now,
Sure.
but I look at it and say, you know, if we really want to see some changes in this industry, there are some simple things. We need to see commitment, some effort, some dedication, accountability, and those are all things that most of us think about. But I think the single most thing that I'd like to see is an intolerance for all the excuses for nothing being done. And until I see that level of commitment, I'll probably continue to be the old skeptic. But the rhetoric we've been hearing, particularly last year, should give us hope. But let's just say I'm not from Missouri, don't want to be from Missouri, but still think like that.
Right. Got it. Well, on that, let's, I'd love to hear from each of you. Let's switch this back a little bit to investing again, which is, as we all know, AIM was founded with the goal of supporting the AIPI investment community. Obviously, right now it is a lot of rhetoric, what we've been talking about, but there are certain things that hopefully organizations can do to change that. One of our goals as an organization is to also put emerging managers or diverse managers in front of allocators like yourself. Could you just each quickly talk about how you guys approach diversity, equity, inclusion in your investment program? Maybe Yap, I'll turn to you real quickly.
Sure. I'll try to be quick. D&I is incredibly important to Calpers. Our hypothesis is super simple. The belief is that no single gender, race, sexual orientation, or any other vectors of diversity has a monopoly on the ability to predict the future, because we all in this virtual room, we're all in the business of predicting the future and how markets move, how competitor dynamics play out, and in a country where women make up the majority of the US population, and where in 30 years, Hispanics, African Americans, and Asians will make up more than half the population, it just seems irresponsible, to withhold diverse perspectives, on a board level, deal team level, et cetera, et cetera. And so, I think just to conclude, we're all long-term investors. If we saw early tea leaves that, these boxes called PCs were going to disrupt typewriters, the difference between diverse teams and homogenous teams, in this case, it really is our fiduciary obligation to lean in and encourage those structural changes, to our portfolios. And, long-term horizon is both an advantage and a responsibility, and it really requires us to advocate for those initiatives that support long-term outperformance by the companies and managers in our portfolios.
Great, thank you. Yeah, Susan, could you say a few words about your DEI program? Or D&I, whatever you guys call it at UTIMCO.
Sure, yeah. So diversity and inclusion has definitely come to the forefront. We actually established in late 2019 a diversity and inclusion council to try to increase diversity and inclusion both within our own investment team and organization, and also kind of increase awareness of diversity at our portfolio managers. Similar to Yup, we recognize that more demographic diversity and inclusion is going to help us make better investment decisions, because we'll have more information and perspective, and diverse managers will also have look at things differently. And so we don't want, just like we wouldn't want a whole portfolio full of value managers, we don't want a whole portfolio full of or growth managers. Maybe we do want value now, right? We don't want a whole portfolio of managers that all look the same, have the same educational background, et cetera. So we don't have a target percentage of our portfolio that we want to be invested with managers from underrepresented backgrounds. Given that our portfolio generally has pretty low turnover, we don't think that's the way that we can make the biggest impact on this topic. So we are encouraging our managers to think about this, and we are starting a program that will be collecting resumes from underrepresented groups across different schools in the UT system and sending those to our managers to encourage them to hire, particularly kind of entry level, and make their organizations more diverse. And I think as those organizations become more diverse, they are the pipeline for future fund managers, right? So I think, relative to like adding 2 more managers in our portfolio that are from underrepresented groups, we think this kind of initiative will have a bigger impact. And then I think, many of us personally, what we've done is, we know we may not be able to hire a whole bunch of managers from underrepresented backgrounds, but, I'm happy to provide feedback on emerging managers' pitches or try to introduce them to other capital sources. And that's a way that I hope to have some impact here.
Great. Thank you, Susan. Mansco?
I've had history with emerging managers. Minnesota had a program back in '94, and while we don't have very many public equity managers left, we do have a few who survived that 25 years, and they're our longest serving managers still in the program and fully
Great.
graduated.
Sure.
At Maryland, I created what was then probably the largest emerging manager program that Clayton Jew helped me put together back in '08, and I think it's still running today. Since that time, I've been trying to spend more of my personal focus on, it's great to have emerging managers, but why don't we have a greater representation in some of the larger firms? And kind of hoping that we see a few more BIPOC people who are, if not in the C-suite, at least being considered for it, and so pushing for that. But given what's been going on the past year, each year I put together a annual management plan. It's actually tomorrow I have a first pass through with it with our administrative committee, and one of my initiatives that I'm trying to do this year is to put together a task force to determine how we can better, as part of our ESG focus, take DEI and make that not only a factor in our investment beliefs, but realistically, what can it be done on the portfolio, recognizing there's not going to be a wholesale change in the portfolio, but what can be done in the portfolio, and probably more importantly, what can be done at my staff level, given that we've got a small staff, not much turnover, and in a community that, let's just say, probably, it's we do have minority communities there, but they haven't really been part of the investment community, with the exception of Roger and his group, but looking to have a better pipeline of potential candidates. So it's very much on my mind, but I also recognize I am kind of getting a little bit too old for a lot of this stuff. So
You're never too old, Mansco.
At some point you want to do something else, and
Right. Well, we are actually out of time. We never got to some of our other questions, but that's okay. As you can all tell, we have some, hopefully everyone.
I was waiting for the last fun question.
I know. Well, I was going to tell everyone we did have one last fun question, but we won't have time to answer it. And it was going to be, are you a fan of Bitcoin, NFTs, cannabis as an investment, ARC funds? Personally, I invested in ARC funds. Anyways, but
baseball cards.
Right, digital art. But I want to thank you guys. Thank you all for your support of AIM, this important initiative. We're all working together, standing up together. So we really appreciate this, and thank you all. And with that, I'm actually going to turn it back to Jim, but I will just before that say to, again, thank you. For folks who didn't get their questions answered, send them over to us and we'll make sure you get some answers. But thank you all.
Thank you, Susan.
Thank you, Susan, for that outstanding panel discussion. and really was very heartfelt. So thank you for being open, honest about kind of how you feel about what's going on currently, and giving us some advice on your investment strategy as well. Susan always does an amazing job. It's my honor also to introduce the next panelists, or not panelists, I guess we're having a fireside chat. And Ginger Liu will be leading our discussion today. Ginger is the CEO of Three Oaks Investment, LLC, but most importantly, she was the co-founder of AIM, because without that, none of us would be here today. She's held numerous high-level positions in the federal government over a number of decades, from Department of Energy, State Department, to the White House Office of Personnel, SBA, and most recently at the White House National Economic Council during the Obama administration. I hope I didn't miss out any other government roles, important roles you've had, Ginger. She was the managing member and venture partner of 2 venture funds in Washington, D.C. Ginger also served on the NASDAQ Listing and Hearing Review Council for 10 years as a member and as a co-chair. Ginger has also served on numerous corporate and nonprofit boards, including Yosemite National Institute, which I love. That's one of my favorite places. Meyer Foundation, Smithsonian Institute Travel Exhibition, and Asian American for Advancing Justice, and East West Center, among many others. So with that, Ginger, take it away. Thanks for leading our discussion.
Jim, thank you so much for that introduction, and I'm very pleased to be here today. We are so privileged and honored to welcome Ed Knight, who's Vice Chairman of NASDAQ and a longtime AIM friend. Before we begin, some ground rules. There's no press allowed during this session. No digital recording or video or photography of any kind is permitted. Ed's remarks are off the record and attributable only to him as a private citizen and not as an official spokesperson of NASDAQ. So by way of some background about Ed, as Vice Chairman, Ed manages global government relations and serves as Senior Advisor on public policy and litigation. During his tenure as NASDAQ's General Counsel from 2001 to 2019, Ed championed many causes for investors in public companies, such as proxy reform, corporate governance modernization, including the Jobs Act passage, and regulatory reform. In addition to his NASDAQ responsibilities, Ed also is Vice Chairman of the Board of the U.S. Chamber of Commerce and Vice Chairman of the U.S. Chamber's U.S.-India Business Council. Ed is a member of the NASDAQ Dubai Board and the Board of the World Federation of Exchanges. Ed, welcome. Thank you so much for being here today.
Ginger, it's such an honor to be with AIM and to be with you, my good friend, who I enjoyed working in public service, and your great contributions to NASDAQ through the years, which we can talk more about today, but it's really great to be with you.
Well, we're just so delighted to have you. And we're here to talk about something very groundbreaking that NASDAQ recently proposed and submitted to the Securities Exchange Commission in the latter part of 2020. The proposed rules would adopt a comply or explain mandate for board diversity for most NASDAQ listed companies. Can you provide an overview of the NASDAQ proposal?
Sure, but to start with, I think it's important to understand what NASDAQ is, and it's kind of unique. I mean, today we were honored, and I was just watching Coinbase go public on NASDAQ successfully, and we're very happy everything worked, and it seems to be doing well and trading quite well. But Coinbase is a market. It is registered with FinCEN, but it is not a self-regulatory organization. NASDAQ and the New York Stock Exchange are self-regulatory organizations registered with the SEC. We're public stock exchanges, and Ginger, as you know very well, that entails public responsibilities. And one of the reasons we had a listing council, and you served so ably on it, is we wanted to reflect in our rules and our actions the public interest. We're obligated to do that. The courts view us as an extension of the SEC. And the issue of governance has been historically an area where we have responsibility to write rules for our listed companies. Board governance is critical to investor protection. And for many, many years, the issue of board composition has been a topic that we have examined and that you examined and advised us on as part of the listing council. We saw during the last 10 years, countries around the world adopt rules with regard to their public stock exchanges and their boards of public companies. In many of the countries in which we operate markets, for instance, in the Nordic area of Europe, that has been the case. We saw the state of California take action with regard to public companies and the composition of boards in fulfilling their public obligations. We heard from institutional investors, from small investors, from stakeholders of every stripe about the need for diversity. And then we looked at the statistics, that which was available, and we saw very slow progress. Your letter of support, AIM's letter of support, highlights much of that very slow progress. We were not achieving the diversity that investors should have. In addition, increasingly academic studies, studies from McKinsey, Carlyle, MSCI, a range of private participants in the market highlighted that diverse boards perform better. They protect investors better. They manage risk better. Interestingly enough, they invest more in R&D. So we felt the evidence was there, the public interest was there, and that we had an obligation to come forward, and we felt it would be better to have a business-led solution than to wait for a government mandate. Therefore, after a lot of consultation, including with organizations like the Chamber of Commerce and Bio and other stock exchanges, we came up with a proposal. And that proposal has two core elements. One is to standardize disclosure around diversity and representation on a board of by gender and underrepresented minorities. And that had not been consistently done. The statistics that we had were not reliable because not all companies were doing it in a standard way. And so our proposal would require directors on a voluntary basis to self-identify in these categories. And there would be a standard matrix that would be produced at the period before proxy season for investors to see. Second, we set a long-term goal for boards to have 2 diverse directors within 5 years, in essence. That would either be a woman and a underrepresented minority, or in some cases on smaller boards, it could just be 1 director. If the board had 5 or fewer members, that would be a woman or an underrepresented minority. The definition of underrepresented minority is a difficult question. Reasonable people can disagree. We turn to existing standards in the EEOC body of regulation and looked at what the state of California did. But we made a very important decision in our view that gets lost in this debate about this, and that is that it is either meet this standard, which we think is a reasonable one within 5 years, and for which there is precedent, or explain your rationale for doing something else. So it would be comply or disclose. And that is an approach that we think builds in flexibility into what we proposed, allows for situations where boards want to talk to their investors about this and explain how they're taking a different approach. Well, one issue has been, the representation of veterans, the other disabled Americans. Again, boards may be more focused in management on those categories. We have room for that in our proposal. You will not be delisted if you do not meet this standard that we lay out. Lastly and importantly, we've tried to provide resources for free working with Equilar, where boards, smaller boards, and there are many small companies listed on NASDAQ, can access the database and services of Equilar for free in order to find diverse candidates. And they have a well-vetted set of thousands of candidates with criteria and descriptions that we think would ease the way, particularly for companies that don't have the wherewithal to engage headhunters. Equilar can provide that service, and we're providing it as a free service to our listed companies.
Well, it certainly sounds like NASDAQ thought about this long and hard and is very thorough in doing its background due diligence and research. The Securities Exchange Commission received many public comments, including AIM's comment, which you referenced. Can you tell me what has subsequently happened since the initial comment period closed? I think it was back in January. Where are we today?
There was an initial comment period in which 209 comments were received from a wide variety of investors, academics, associations, large investors, small investors, members of Congress. So it was a very complete record in which 85% of the comments were positive and reinforced the rationales that we had identified for making this change. One issue that has come up, critics of this say, well, what's NASDAQ's role in social engineering or cultural issues? That's not how we view this. We think this is a core board and corporate performance issue where the data shows and market participants like T. Rowe Price and Wellington confirm that companies perform better at their core responsibility of risk management when they are diverse. And that's intuitively, that makes sense. Frankly, you do not want a company in which management does not get pushback, where there isn't a healthy dialogue. And if management picks people that are all from similar backgrounds, they're not going to get that diverse debate that looks at risk from many different perspectives. And so the data confirm that, the comments have confirmed that, and we feel, again, this goes to a core issue of corporate performance. But one other issue that you cite in your letter and that we've cited and other commenters have come back to is investor confidence. Investors and retail investors we see are getting more and more into this market. And that's a good thing in my view. But they want companies to reflect their values. They want to have confidence in the management of those companies that their cultural values and issues are being fully considered. The same thing is true with employees, but particularly around investor confidence. So we have taken other steps that you were part of in order, for instance, mandating independent directors. You can't find a direct correlation between corporate performance and independent directors. but you do have higher degrees of investor confidence when they know the boards are over a majority are independent. So we feel this is as important as corporate performance is on the investor side, them having confidence that these companies reflect their values.
This is really groundbreaking. I mean, this is very forward-leading on behalf of NASDAQ. What has been the feedback or response you've received from some of your peer exchanges from around the world?
They have been very, very supportive. And I want to reference, your previous panel. The world is in a difficult place now. And it's not just in the United States. We saw a terrible tragedy in Great Britain recently with the murder of a young woman. And that generated tremendous public concern around the treatment of women in Great Britain. And my understanding is that our proposal was something that was mentioned often in that context. And in fact, the UK FCA referenced it and that it was moving in the same direction with its rules in Great Britain. So society had not moved quickly enough. Frankly, as you know, Ginger, NASDAQ does not like to be a reactive organization. We feel like the companies who list with us expect us to lead just like they do in their sectors and in the parts of the economy that they operate in. We break barriers. We, break China, so to speak, in making new products and innovations. And we did not feel NASDAQ's role was to sit back and wait any longer. And we also, as I said earlier, felt it was important that this be led by business and not government mandated, that we needed to show that the business community would support this. And we've had the support of organizations like the US Chamber of Commerce. I'm proud to serve on their board, but as everyone knows, they're not necessarily the most liberal organization. And they spoke up for this early and recognized the value of this. So other exchanges, other business organizations have all spoken, but the question of diversity and inclusion is different in the United States. Of course, it takes on a different set of issues and characteristics than it does, for instance, in Norway, where the primary issue is gender diversity. So we have our own challenges, and we needed to deal with them.
So what are the next steps for the SEC in terms of this proposal? Where do we go from here?
In terms of the SEC, one big development today was that Gary Gensler, your friend and mine, was confirmed in the Senate by, I think it was 53 affirmative votes. Frankly, I think part of, to the degree there's controversy around Gary, it's around these issues of ESG and the like. And in our communications with the Biden administration and their transition team, I can't speak for them, but they did seem to be positive, not surprisingly, given what President Biden ran on and the need for dealing with the issue of equity in our society and inclusiveness. So we're hopeful that we will get approval. The comments have been positive, as I mentioned. The staff comments have also been very technical and not critical of the policy assumptions. But I think the final action will have to wait for Gary to get started, which will probably be very soon, today or tomorrow. And in terms of the SEC schedule, their comment period officially is closed. They could act by June 10th, they must, unless they ask for additional time, which would extend it out into August, or if any individual commissioner wants it to be considered at the commission level, that would open up more time also. But we feel like the decision will probably come sometime in the summer, maybe late summer. But comments I want to emphasize, and you know, again, from your work with the SEC, Ginger, the SEC reads all comments, even if they're written and submitted after the comment period ends. AIM and many organizations affiliated with it and that work on these issues have submitted positive letters, and we appreciate that. As I said, it's a very strong record, but I am going to send to your organizers a website where more comments could be submitted, or frankly, if you'd like our help in arranging a meeting with the SEC staff, we'd be happy to do it, a virtual meeting. They've been open to that. If there are particular perspectives on this that you feel you'd like to get across. But, you know, we're cautiously optimistic and we're hopeful that it'll be done before the fall.
Well, we certainly would welcome an opportunity to meet with SEC staff and to continue to be supportive of the proposal. And please send us the link so we can make that available to the AIM network. So if individuals would like to submit their own individual comments or letters of support, that they can do so through the link. I mean, I think this is one example. Rulemaking does take into account the number of comments received and the number of people who participate in the process. And I think the greater letters of support or validation that any regulatory agency receives increases the likelihood of passage or adoption of the proposed rule. Now, if I could just pivot, we don't unfortunately have that much time left in our short period together, but stock exchanges around the world are facing a number of challenges, including greater competition for listings from other exchanges and private capital markets, and the competition for trading from alternative trading systems. In addition, special purpose acquisition companies, SPACs, as an investment vehicle has certainly been in the news, certainly in 2021. Can you give us an update on how NASDAQ has been doing in getting new listings and what you think the future of SPACs will be for the remainder of this year?
Well, the SPAC phenomena has been quite extraordinary. Since the beginning of this year, there have been well over 300 IPOs in the United States. That's just, as you know, Ginger, we used to think it would be a great year if we had 100 IPOs on NASDAQ. We've had over 240 IPOs already before the end of this quarter. And 70% of them have been SPACs. Now that can't continue forever because, as you know, the heart of a SPAC is the ability for it, with enlightened management and experienced management of the SPAC, to acquire assets that are undervalued. And there are so many SPACs out there looking for assets. You know, eventually we're going to run out of appropriate targets. And I think you're starting to see that slow down for that reason. But it does address a core concern, again, that we worked with the Listing Council on for years, which was, as the years progressed, more and more companies were choosing not to go public. And when they went public, they did it after 10 years or longer of growth that most investors were not able to participate in. So the SPAC vehicle, with the precautions that have been built into it, and NASDAQ has tried to strengthen the model, enhancing disclosure, requiring, for instance, the right of SPAC owners to exit and get their money back, to vote on the acquisition, to have full disclosure. All those things, those protections have served it well. But the core issue was that companies were choosing not to go public because of the cost and the complexity, and the SPAC option simplified things and reduced the cost. I'm happy to report in our conversations with the current SEC, they recognize that issue. So although they're mindful of the risk associated with SPACs, and they put out some recent communications that emphasize the disclosure obligations and the accounting issues associated with SPACs, and that they're being vigilant, as we're being vigilant. We're very focused on those disclosures, on particularly the issue of the conflicts that can come up between the management and the investors, in the sense that management only gets paid if there's a deal, and that may force some SPACs theoretically into deals they shouldn't get to get paid, and the deals will not be as they should be. And so that's a concern. But on the one hand, where we're trying to perfect the model and protect investors, both we and the SEC, around disclosure and accounting issues, there's also, we've been working for years on the core IPO model, and where regulation can be streamlined or modernized. I like to use those terms as opposed to deregulation. We're not talking about not regulating the securities markets or IPOs, but regulation needs to be revisited, and investors and like the members of AIM and those who advise investors need to have as a reasonable option an IPO option that isn't an over-regulated one, and that is a modern regulated model. And so I have some hope that we'll be able to work with, continue the agenda of working with the Biden administration on streamlining the IPO process while improving the SPAC process. But generally, the capital markets are very vibrant now, and we're very proud of the amount of capital that's being raised in these markets very efficiently and put to work to, among other things, put people back to work.
Ed, you've been very generous with your time. I know we're toward the last couple of minutes of our session. Just a little bit of a fun question. You've had an amazing career. You continue to be a thought leader at the highest levels, not only at NASDAQ, but at other organizations as well. What's in the future for Ed?
Well, I love working at NASDAQ. I mean, it is a place where you can show up every day and learn something new. And that's what I like doing, and mentoring some of the young executives that we have. And we just made a major acquisition of a Canadian company that is involved in technology surveillance of the financial markets using artificial intelligence, called Verafin. And I love to learn about that. But I take it one day at a time, and I always feel good to be engaged in NASDAQ's public responsibilities and trying to meet our responsibilities to investors every day.
Well, Ed, thank you so much for participating in our fireside chat. It's been
And again,
great.
Thank you, Ginger, for all your help through the years, and thank you, AIM, for your support of our board diversity proposal. And certainly, if anyone wants to take a company public, they know who to call. So we're happy to serve you.
Thank you. And now thank you again. I'll kick it back to Jim Park.
Thank you.
Thank you, Ginger, for that terrific discussion with Ed Knight. I appreciate that discussion about diversity and inclusion and the leadership role NASDAQ is taking on that very topic. It is my pleasure to introduce John C. Yang, the President and Executive Director of Asian Americans Advancing Justice, AAJC. John leads the organization's efforts to fight for civil rights and empower Asian Americans to create a more just America for all through public policy advocacy, education, and litigation. His extensive legal background enables AAJC to address systematic policies, programs, and legislative attempts to discriminate against and marginalize Asian Americans and Pacific Islanders and other minority communities. AAJC has been at the forefront of working to protect the AAPI community from the recent surge in the hate crime that we have all witnessed. John, thank you for being a part of this program.
Thank you very much for having me.
Thank you. John, we've all seen the terrible images of hate crime, attacks on our elderly, young people. And it's really heartfelt, and it angers me. It hurts me as an American to see that our community is being treated in this manner. This is not a new thing, hate crime against Asian Americans, but the velocity and really the audacity of the types of attacks I've not seen it in my lifetime. Can you share some thoughts as to why you think this is happening to our community today?
Sure, and I think there's two principal drivers. On one side is COVID-19. And with COVID-19, what we've seen is a lot of fear, whether it is health fear or whether it is economic fear from everyone in the community. And this includes Asian Americans. But what happens with that fear is that people look for someone to blame or look for a group to blame. And unfortunately, especially with the prior administration and their use of language such as Chinese virus or Wuhan flu, not to mention even worse derivations that we've heard, people got conditioned to target Asian Americans. People got conditioned to think of Asian Americans as the reason for their fears. So that's number one, what is driving some of the horrific violence that we've seen today. Number two is what we have to recognize is real geopolitical tensions with the Chinese government. And we've seen this throughout history, that when we do have these international tensions, there's a backlash against the community here in the United States, and specifically here it's the Asian American community. And why I say that we've seen it throughout history is you go back to World War II when Japanese Americans, and I emphasize Americans, were incarcerated here on our own shores because of alleged and never proven dual loyalties to the Empire of Japan. You fast forward to 9/11 and the backlash against what we saw with respect to the Arab, Middle Eastern, Muslim, South Asian American communities because of the so-called war on terror. So we've definitely seen these moments, and there are other moments in our American history where we've become a target. So those are the things that are driving it, and especially the spikes that we've seen is this fear coupled with this notion that Asian Americans should be targeted.
Yeah, John, it's such a difficult thing to see and difficult thing to watch. And obviously we've seen situations like Vincent Chan, Detroit auto workers killing him during the during the auto war, the whole situation back then. But it's been like you hear one couple of stories, situations like this, but you don't see this kind of concerted just drumbeat of people getting attacked every day, and do you feel hopeful that we'll see some end to this?
I do and I don't. I feel hopeful that people are very much aware of this issue in a way that they hadn't been before. And when I say issue is with respect to the violence against the anti-Asian American community, the Asian American community. So in that sense, I'm hopeful that there's awareness, that awareness is starting to bring a response. But I am of mixed minds because what we are fighting is racism. And so in that sense, I see this as another piece of that puzzle that is also George Floyd, that is also Ahmaud Arbery and Breonna Taylor, that puzzle that includes the movement for Black Lives. That's part of the same arc that we've had during this year, that puzzle that includes the insurrection at the Capitol. And so we have to think about how we all dismantle racism together. And so in that sense, it's not going to be an easy fix. It's going to require all of us leaning forward in different ways to address this issue.
Right. And obviously the racism the Asian American community faces is different experience than the Black community, the Hispanic community, the gay and lesbian community, and so on and so forth. But they're all connected, right? And I guess the work that you do of advocating on behalf of all communities, but in this case specifically for the AAPI community as it relates to hate crimes, what kind of legislative and policy efforts are underway to ensure that we're protected? Our elderlies are protected, and now we see that kids are getting attacked, ensuring that everyone is protected out on the streets, out in their neighborhoods throughout the country.
Yeah, so I think there's a few pieces. And before I even talk about that, one thing that you mentioned, Jim, that I do want to go back to is sort of how we've seen racism affect all of these other communities, LGBTQ, the Hispanic community, the Black community. And I think that's one thing that really resonates with me is right after the Atlanta killings, I had an opportunity, we organized a call among a lot of the national civil rights leaders, if you will, the NAACP Legal Defense Fund, Unidos US, Human Rights Campaign. And when I looked out into this Zoom, and what I saw was not only my friends, but I saw the Charleston Church, I saw the Tree of Life Synagogue in Pittsburgh, I saw the Pulse nightclub, I saw El Paso. And unfortunately, Atlanta has been added to that list with respect to the Asian American community. So again, I see this as us needing to move forward together as far as how we address racism. So when you think about solutions, there's a couple of pieces. On the federal side, certainly one piece would be some of the hate crimes legislation that is pending in Congress. There's one piece called the Jabbar Hire No Hate Act. Representative Mang from our community introduced the COVID-19 hate crimes bill. Both of those are pieces of legislation that we think helps to elevate the issue, give us better data about the issues, and also, especially with Representative Mang's legislation, give additional resources to our community. Because part of this is having criminal enforcement alone isn't going to solve the issue. What we really need is investment in our communities for some really community-based solutions to make people feel protected, because frankly, police alone aren't going to make us feel protected. Rather, it has to be a community effort. So those are the pieces that are happening on the federal side.
You talk about the solutions, and sometimes we individually feel helpless in a situation like this. And you kind of think about your kids, your grandkids, and the generation to come. What can we be doing individually to create more of a long-term meaningful change so that this is not something that we have to keep hearing about, witnessing for decades to come?
Right. So if you're talking about change and what can we do, in the long term, I do think it's about education. The fact that Asian American history, and again, I emphasize the word American, is not really taught in our K through 12. And what that leaves us with is stereotypes about the Asian American community, specifically this perpetual foreigner stereotype, that no matter how long we've lived in this country, whether we were born here, we are seen as a foreigner, we're seen as other, and therefore we're seen as a threat. And so if you start teaching in K through 12, in high school, in college, obviously, about the 442nd Combat Regiment, the most decorated regiment in all of World War II, that were Japanese Americans who were fighting for the United States while their own relatives were being incarcerated back at home. You think about Chinese Railroad, how they did the hardest part of building the Transcontinental Railroad here in the United States by dynamiting through parts of the Rocky Mountains and part of the mountains to make that connection at the Golden Spike. If you start talking about some of these pieces as part of American history, people will see that, yes, Asian Americans are part of this society. We're not invisible. We're not that other to be feared. The other thing I would say is in terms of what we might need short term, I've talked about investment in our community with respect to federal spending, local and state spending. And also there's little things that I think we just as a community can do. And what I mean by that is one of the things that we've been doing is offering what's called bystander intervention training. And so that allows people the tools. And this doesn't have to be Asian American. In fact, we want everyone to participate in this. When they see an act of hate, that they could do something about it. It could be as simple as checking in with the victim to make sure that they're okay. It can be documenting what happened. It could be getting someone else over to the scene to help with what happens. There's all sorts of different techniques that people can learn. One of the most common things we always hear in these incidents is, I didn't want to make things worse. I wanted to do something, but I wasn't sure what to do. And so what these types of trainings do is really help people with that. Over the course of the last year, we've trained over 30,000 people. We have about 50,000 registered, but we really want to make this accessible to everyone. It's common sense techniques that all of us can do to help make each feel a little bit more protected.
Well, my dog is not happy about that whole situation either, apparently. But John, thank you so much for those words. You talk about the railroads, right? And the Chinese immigrants built a part of that railroad, the toughest part, as you point out. But we're not ever seen in that photo when they complete put in that golden spike, that last photo. I think what we have to remind ourselves is that we have to be in the picture. We have to be visible, and we have to stand up, and we have to, fight for what's right for the community. And I really thank you for all that you do and what AAJC does every day to protect the community, advocate on our behalf. That's why AIM is working within our community, investment community, to do our part of raising enough funds to support the good work that you do. We're also working with Stop AAPI Hate, as well as other local groups, to make sure that we are providing everyone with the resource you need to do your job, and so that you can continue to advocate on our behalf in our community. So John, what an honor to have you on this program. Thank you so much for being a part of it.
Thank you very much. It was wonderful to be with all of you.
Thank you, John. Hi, everyone. As you can see, I'm a real quick change artist. I changed into a new suit. No, actually, obviously that conversation with John was pre-taped. We had to do it a few days ago because he wasn't able to join us live. But I can assure you that everything that happened before and what's about to happen next is live. And I'm very excited about this final panel that we have, Women in Leadership. And I can't think of a better person than Suzanne Wang to lead us in that discussion. Suzanne is the Chief Financial Officer at Palladium Equity Partners, our top tier sponsor, supporter at AIM. And she is the newest member of AIM's board. And she also serves on New York Chapter Advisory Board for a nonprofit African Children's Choir. I'd love to hear about why you're involved with that particular. I'm assuming you're a singer, and but we're excited about this panel. You have a dynamic group of people you're leading in this final discussion, and Suzanne, take it away.
Thank you, Jim. And no, I'm not a singer. I wish I could sing, but I'm not. I'm, been involved with them for many years, and what I love about them is we provide education and for children that go on to wind up helping back and giving back to their own society and people. So we call them change makers. So that's why I'm involved and been involved for many years. But thank you for that introduction. It's been an amazing program so far, and good afternoon, everybody. So I'm really excited about this panel. I'm here today with this panel of amazing trailblazing women who've accomplished so much in their careers. And not only are they leaders at their firms, but they're also leaders in women's diversity and inclusion efforts. So let me start with a few quick introductions. We have Betty G. She's a managing director and head of Prime Sales Americas at Barclays. Betty was recognized as one of 50 leading women in hedge funds in 2018 and 17 by the Hedge Fund Journal and EY. She is also co-chair of the Embrace American Professionals Forum and sits on the SteerCo for the Women's Initiative Network. We have Cynthia Zhang. Cindy is a fellow AIM board member and part of AIM's Emerging Leadership Initiative Committee. for her day job when she's not busy with AIM. She's at Fairview, where she's a partner and member of Fairview's investment committee. Fairview is a firm that actually my firm partners with and knows very well. They're a great firm that is very diversity focused, even before it became a mainstream thing to do. And next we have Helen Quick. Helen is a founding partner and managing director of Locust Point Capital. Helen is a member of the investment committee at Locust Point and also oversees the firm's ESG initiatives. She's also a member of WAVE, which stands for Women's Association of Venture and Equity. And that's an organization that we partner with in our ESG efforts. So, thank you all for being here today. And for the audience, if you have any questions for this group, please message us on the Q&A or chat box. So with that, let me start with the first question that we're getting. So all of you here are leaders in your respective companies and in your ESG efforts. So it'd be great to hear and understand what leadership looks like to you. Cynthia, would you like to take that question?
Yeah, sure. And thank you, Suzanne and AIM, for inviting me to be part of the panel. I'm just extremely proud of AIM and the board and what we've been doing over the past year and the way that we've been growing so strategically. In terms of what leadership looks like to me, so many years ago when I started out in banking, I worked with many senior individuals in banking, and those who I consider to be leaders, and this can be leaders across all levels, or those who are passionate about their job. I think, yes, we're all in finance and asset management for financial gains. But those, I think, who care about the end goal, either that's to be an industry expert, product expert, or just serving his or her duty to the clients. And those people have those passions, they have done very well. Leaders are the ones who are unafraid to roll up the sleeves, especially if you're a junior person and you're messing up, they're there to comfort you and let you know that I got it. Don't worry, you've done well. Just, keep working. And then they're the ones who are they're not afraid to give helpful criticisms and feedback, and you get the sense that you can trust them. So I think leadership also equals trust. And then also leaders are loyal in terms of my definition and their understanding. They have this ability to create a work environment that fosters inclusion. That's either inclusion in ideas or concepts, or even just professionals who may not fit, the stereotype of what a banker should look like or dress like. And I believe those are good qualities of leaders who can look beyond those stereotypes and biases.
That's great. Thank you, Cindy. I guess, Helen, do you have anything to add with that, given your experience you started your own firm basically, right?
Absolutely. I have kind of an upside down view of leadership and what leadership means to me. I have a good friend, Courtney Lynch, who wrote a book called Spark. And she stole my idea, which is totally untrue. She came up with this, but I have actually adopted her view. And it's something I think I actually have believed in for a long time. I think the word leader has absolutely nothing to do with where you show up in an org chart or what the words are behind your name. I think leaders are actually anyone in your organization who have an ability to influence anything or anyone. So in that regard, this book, Courtney sort of she's extraordinary. She was a Marine and then she was a lawyer. You can forgive her for that. And now she runs a leadership organization, and she describes this concept of being able to cultivate and encourage leaders all over your organization. So, you've got to find doers and thinkers and innovators, influencers. Anybody who's a catalyst for any kind of personal or organizational change is a leader to me. And so when you think about all that we've heard today about diversity and inclusion, this fits pretty well with that concept, meaning that if you really do embrace this idea of leadership, then you're going to also embrace diverse thinking, diverse people, diverse, anything that can bring something to the mix, because you're going to find a leader in your ranks who's an analyst. You're going to find a leader in your ranks who's old like me. You're going to find leaders everywhere. So I encourage you to buy Courtney's book. She's on my personal board of directors, which has been an extraordinary, I'm really lucky to have her. And even though I went to UVA and I'm not a huge fan of Duke, even Coach K has hired Courtney in her leadership organization. And, you know, he's doing okay. So, well, maybe not this year, but overall they're doing fine. So that's what I think leadership is.
Great, thank you. It's kind of interesting what you both were saying, you know, and Cynthia with the stereotypes and everything. But you know, as we think about leaders and you know, and stereotypes and everything, you know, often women come across just differently, right? You know, are there qualities associated with, you know, women that are often, you know, overlooked or underestimated, or just misunderstood in general? You know, I guess, you know, we're just different, right? Than what you normally would picture as the stereotypical leader, right? And so, Betty, would you like to take that one?
Yeah, sure. And first off, I just wanted to say thanks for having us on. I'm grateful to be in the company of such amazing women leaders, and also grateful that we've been able to get more involved with AIM. Which has been a really fulfilling opportunity. But Suzanne, to answer your question, I think some of this is around an acknowledgement of the value that that there are different styles of leadership that are equally effective, and that different styles or styles that fall outside of the normal distribution doesn't necessarily equate to someone being less convicted or less engaged or less assertive, right? And I don't want to be too stereotypical about this, but just some observations, right, from personal experience and also from speaking with lots of women about leadership all across the organization, right? I think one of the qualities is, in some cases, there are styles where women might, you know, at the outset seem to be less vocal or reserve immediate judgment, but offer extraordinarily sound judgment, right? But maybe prefer to listen and process viewpoints input more thoughtfully first before expressing a viewpoint. In many cases, that also involves, you know, I've heard folks say, you know, taking into account body language, other ways besides speech through which clients, colleagues might be communicating their interests, right? And then there's also the aspect of that where we've often found and heard also that, you know, women sometimes prefer to do more of the quote unquote homework, right, before they speak out. So all of these, and in some cases have also heard, you know, in this now predominantly virtual environment, that some of these traits present themselves as additional challenges, right? Over video, for example, it's much more difficult to read the room, or it's much more difficult maybe to insert yourself in a conversation if you have not started out by being the most vocal. Another characteristic is the ability to, I think it's probably best described as synthesize large themes and also be able to manage or optimize for multiple stakeholders. So, you know, one example might be, you know, and we come into things like this a lot, a tricky situation with a coworker and clients. I'm in sales, and so this type of a situation comes up not infrequently, right? So it could be something as mundane as the perception that a coworker is cutting someone out in their engagement with a client. And there's also a sensitivity around, you know, how the client interacts with that coworker. The solution for some might be, you know, a single dimension of let's just go confront the person who's causing the friction, right? But I have in that circumstance, you know, in that example, there are female leaders who would instead try and find a solution that sort of addresses the interests of the client and the coworker and the root discontent, right? So it's much more of a holistic approach to a solution, or even, you know, in situations where you've got a group of folks talking about strategic direction of a business, right? You probably have a lot of local folks saying, let's grow, let's invest. But in situations, you know, you may have the women saying, well, let's get the input from this group, that group, this stakeholder base, that stakeholder base. Let's make sure we socialize the how in addition to the what. And the third thing I'd throw into that bucket is just, I think in many cases, especially in this industry, women may have had to work a little bit harder to build relationships and foster connectivity. And that's just a function of, you know, commonality, right? And there are, relatively speaking, less women represented in the finance industry. And so, you know, there's this, sometimes I find underrated, but real ability to build rapport, understand the symbiotic nature of relationships, to establish credibility, right? Whether that's the ability to network internally, which I know, you know, on its face sometimes is more difficult for women who, generally speaking, might feel less comfortable just popping into a male leader's office and talking about the game that was on last night, right? Or even in terms of networking externally. So I'm in sales on the sell side, and I'll throw in the example that we hear from a lot of female sales folks across the organization, where it's kind of difficult to insert yourself in a foursome when you're playing golf, or for the casual drinks after work, right? And I feel women have found ways to build credibility and overcome just a little bit more, incrementally more, of the lack of overt commonality. And that's certainly a trait or a quality that is of immense value.
Thank you. No, that is so true. I mean, I just, remember just going up the ranks, and my style is just slightly different than other people. I'm more collegiate, and I don't, not necessarily assertive. I am, but that's how. But I had to be, right. But naturally, it's just we're different, and that's really good. So interesting what you said. Cynthia, do you have anything to add to that?
I think Betty must be reading my mind. We must have been conversing over the weekend, unbeknownst to us, but I agree with everything she just said, and just the style of an introvert versus an extrovert, and it's just so different. And I mean, of course, there are women extroverts and who are leaders, but I think, just to add on to this, there's this article that I read recently, published by Harvard Business Review, called "Stop Telling Women They Have Impostor Syndrome." And so for those who are into kind of the psych or psychology kind of phrases, an imposter syndrome is loosely defined as doubting your abilities and feeling like a fraud. And they did a survey, and the likes of Sheryl Sandberg and I'm sure women in our industry sometimes doubt their ability in our environment. And the reason is that the article goes on to say that that's because due to systematic bias, we were not supposed to be here in the first place. We were not supposed to be working. Look at our school system. School starts from 8 to 3. All working moms know this pain. That how is that doable? How can you juggle both? But so just from an already uninviting atmosphere or environment, we're faced to do more, to work harder. But the article also cautions that confidence doesn't equal competence. And so that's something that I just want to, stress, that if you have a quiet but competent woman, you need to keep her on board and create an environment, a work environment. And I'm not even talking about like work time flexibility, but just an environment where she feels safe, where she feels not excluded. To Betty's point about, going in for, going out for drinks after work and not feel like you're the third wheel. And so those are the comments I have to add. And I think it's extremely important. I think many firms are studying this topic and creating a more inclusive environment where they will be able to retain women talent for the long term.
Yeah, thank you. Thank you for that. Yeah, and so all of you guys have really, accomplished so much in your careers. Would you say there was a pivotal moment in your career where you had to take risks to get to next level? And what did it look like, and how did it turn out? I think, Helen, I think you probably had to take probably a very big risk with starting your own firm. So I'd like to hear from you.
Sure. So I was a lawyer, don't hold it against me, for over 25 years. And I had a client for 20 of those years. And they were a couple of guys in New Jersey that did lending in long-term care and seniors housing. It's not all that sexy, but it's solid business. And I helped build it, and as their inside-outside general counsel for years. And Eric, one of my partners, called me up in 2016-ish, 2015, and 2016, and said he'd been doing SBA financing for years. And he called me up and said, do you think, institutional investors are ready for seniors housing as a non-traditional asset class, in particular subordinate debt, and within that, like rural and secondary, tertiary markets? I was like, I have no idea, no clue, no idea. He goes, well, don't you do that thing where you get all those incredible women together once a quarter for that dinner, right? And all those women are like allocators, right? They're and I say, oh, yeah, no, you know what? I do. And in fact, I do know a lot of women in this industry that will, sure, let's see if I can make a couple of calls. So I made a couple of calls, and fast forward 27 women later, including, I would be remiss if I did not say, one of the most important people I called was Ginger Lou, who had been to a number of my dinners, and whose advice is, as anybody who knows her, is invaluable. She has this incomparable ability to just say it, like it, without any candy, like just say it. So she was amazing. But from Ginger led to somebody else, anyway, 27 women later, we had closed on our first fund. We were off to the races. We'd gone up the ranks in the institutional investor ranks. We had a placement agent. We were ready to go. We closed our first fund oversubscribed. We just closed our second one in December, and the third one is in the works without me even knowing it, because of this strange pandemic market that we've got right now in our industry, which is now on the upswing, which is fabulous. But somewhere in that summer between, I don't know, women 17 and 18, my two partners from New Jersey drove down to DC, where I am 5 blocks from the Capitol. And they said, yo, Helen, we can't do this without you. I was like, I know, I'm so fabulous. Of course you can't. And they're like, no, really, we can't do this without you. And I was like, what are you guys talking about? Like, no, really, we want you to quit your practice, give up the practice of law, do something completely different, and just join us full time as a partner. And here's the vision. The vision is, we're equal partners. We're going to build a company that looks nothing like your law firm or nothing like anything else. It's going to be diverse. All those things that you care about are going to be front and center. And yeah, I know seniors housing and care is not all that sexy, but it's got a 16% loan level return. So you can do this, right? And it didn't take me long to realize that it was an absolutely extraordinary opportunity. One, these guys are great and they're super smart, and I was lucky. But two, it was the first time, and almost 20, it was, now I've been practicing 30 years, right? In almost 30 years, it took me to find that opportunity to actually build the company that values the things that I value. And for years, I bloodied up against the brick wall of trying to change these big, huge institutions and bring diversity and inclusion to the forefront. And finally, the world is starting to catch up. but in a New York minute, I was like, for sure, I'm just going to give away this multi-million-dollar practice and do something completely different. And I haven't looked back since. So I have to say, it is something that I'm exceedingly proud of. If you go on our website, you'll see all the diverse faces. I mean, who was it that said, Fiona Ma said today that you have to be deliberate. We make sure that for every person we hire, we have 1/3 diverse resumes. We make sure that that every single person it buys into this concept of diversity and inclusion. And the last thing I'll say is, through this network, this professional network of women, there's just one connecting thread. And Yup Kim said it today. It's radical generosity. Things like this don't just happen. You don't just get a couple of guys from New Jersey and a redhead in DC together and build an amazing fund. You have to have a group of people who have generosity of spirit, like Ginger, who prop you up and get you to that next place. So this is the only thing I would say, is that everybody in this audience, everybody who's part of AIM, which is an extraordinary organization, has that generosity of spirit. And I know this because I've run into lots of you all the time. But if we keep feeding that generosity into what we're doing and seeing, I can see more locust point capitals happening all over the place. So that's all I have to say. So thank you for having me again. I appreciate it.
Thank you, Helen. Very inspirational that you did this. And you know, I just want, I know I'm out of time, but I do want to hear from Betty as well, because Betty, I know there was a slight change in your career from the last place to this place. I'm really interested in hearing that. I'm sure that was a pivotal moment in, you know, in your career.
Sure. Not quite the magnitude of risk that Helen took, but we share the leaving behind the legal career, and today being a recovering lawyer. Well, so and being mindful of time, I'll try and make this quicker. But the biggest risk I took was actually not the jump from the legal industry into finance, but there was a time where I accepted a role change to focus more on a business building type role. And that business was being led by a really visionary leader who also happened to be, and I use this term clinically, also happened to be a sociopath. I'd done my diligence and understood that the leadership style and personality was pretty toxic, but I weighed that against what I thought was the opportunity set, both in terms of what the broader team was trying to accomplish, and the role and skill set that offered for the next step in my career. And I kind of went in eyes wide open and said, I'll do this. And if nothing else, I guess I'll learn a lot. It was an extraordinarily difficult experience. Our styles and our values were not aligned, and that plays out when you're thinking about everything from how do you go set strategy to how do you go incentivize your teams to how do you go manage stakeholders. It comes into play when you're at odds over how you make difficult decisions, the whole shebang. And what came out of that experience, with the benefit of hindsight, is I learned a whole bunch of things that I think would have taken me a decade, 2 decades to really learn, right? I learned the value to me personally of being able to say that I conducted myself and my decisions with integrity and how much that mattered to me. I learned the value of being extraordinarily flexible and learning how to pivot with different styles. I learned the value of building a rock solid support network of like-minded peers and friends. I learned the value of focusing on common grounds and focusing on common outcomes, the value of managing up. It made me a lot more sensitive to understanding that there was a range of different styles for doing things like managing stakeholders, incentivizing teams, right? And while there are some ends of that spectrum that will never work for me and never be my style, it was extraordinarily helpful to me to understand that there's more than 1, 2, 3, 4 ways to do something, right? And you should incorporate what you're comfortable with into your toolkit. And it also just forced me not to take things personally, and understand that usually when something professionally or personally is extraordinarily difficult or awkward, it's usually difficult and awkward for everyone. And so, like, you know, in sum, that experience that risk I took was nothing short of traumatic, but was amazing. And I'm not a sucker for punishment, but if I had a do-over, I would have made the same decision because of what it taught me in terms of what I thought of leadership and influence. And there's literally not a day goes by that I don't reflect on something that I realize I trace back to that experience and to that role.
Thank you. Thank you. No, this is like, you know, I really am thankful for you guys sharing your personal stories and your insight. I'm sure the audience really appreciates it as well. So thank you today for joining us for this great panel. With that, I'd like to turn it back to Jim Park. Thank you.
Thank you, Suzanne. That was an amazing panel discussion, and the only thing that that we kind of fell short on is not making it long enough. We try to pack in a lot in this program. We have, you know, it's our first program out of the gate. We'll have a few more of these before we do our in-person event in September. But this event would not happen without the generosity. Frankly, I think it was Helen who mentioned generosity, and maybe it was Yup mentioning it as well early on. Really the generosity of your time, really sharing your knowledge, and also a commitment to inclusion in our industry. So we can't thank you enough for all of that. But all of this work doesn't happen just without the support of so many sponsors and partners we have. I just want to list out, there's too many to kind of mention, but you can see all the companies that have supported us over the years, some new, and we're growing our network and our sponsorship base every day. So I hope everyone can support the work we do. We look forward to hearing about some of the other topics, other discussion points that you would like to hear. But I just want to wrap this up and once again thank all the speakers for their generosity and their sharing their time and their knowledge. And have a great rest of the day, and look forward to seeing you all very soon.